you're in the same business today that you were a month ago, you're on your way out of business, which means there's never been a bigger opportunity to launch or relaunch. What's the most important thing I have to do in the next 60 minutes? And you either have to take a step up the mountain, or some of us might have to continue to take steps down the mountain, but you can't stay still. The oldest profession in the world is intelligence. It's what wins wars and wins markets. And whoever has the intel always wins.
This is more of an immediate shock where we're going to see a cultural and financial aftershock and definitely a new normal that comes after it. There's a lot of great trading opportunities right now involving like what I call like the stay-at-home stocks. Fundamentally, some of these companies might not be great, but they are hot trades right now. But you have to decide, am I buying this now for a longer term hold? I want to hold this 3-5 years until this gets to mature into a real investment, or am I buying this as a kind of a crisis trade? And if so, I'm going to set my stop losses appropriately on this. So if I'm wrong, I'm going to get out of it.
Welcome to episode 7 of Crisis Investing 2020. Really excited to bring to you the content that we have right now. Before I do, just a quick reminder, you can own this. It's out of our normal process as far as how we package it and how we sell it. It's simple. You can own it. It's $79. We have bonuses there for you. We've made it really, really simple. This information is something that's important. It's timely, and it's something that I hope will add a lot of value. I know some people said they missed a piece here, missed a piece there. I get it. So really no brainer, $79. You can have it, you can study it, you can look at it over and over again. Makes it simple for everybody. In this particular episode, we start out with Verne Harnish. Verne has written many books in business that I have read. He is the guru to other business gurus I know, and he especially understands the dynamics of business in troubled times. So Verne has some phenomenal insights that I think will help you think clearer, see clearer, and give you some action that you can take right now in the circumstances. After Verne, I'm going to be introducing you to Greg Guenthner. Greg is somebody that has been trading the stock market, the equities markets, for a long time. He has seen this type of thing before. Yes, this pandemic is something new and different, but there are also some things that are similar today as in other downturns. And Greg had some phenomenal insights. As a matter of fact, I literally got done with my interview with Greg and went to my brokerage account and started doing a little bit of trading based on what I heard from him. He gave me a lot of confidence, a lot of insight. There's some significant wisdom there, and it comes at you in this sort of low-key and humble way. I really loved that particular conversation I had. So make sure you listen to it. There's some extraordinary insight there that can be very profitable for you. Let's dive into episode 7. I am really excited for this interview. I actually had the privilege to be with our next guest maybe a couple of months ago out in Boulder, Colorado. And I sat after, I've read his books, I've followed his work. We've incorporated it into our own businesses very successfully. Impact was massive. But he's the guru's guru as far as I'm concerned. The business gurus I know always look to him as their guru. So he's got great context about, I believe, what we should be thinking about relative to business. Will we go back to business as normal? How does this crisis have an impact on our thinking, not only ourselves if we happen to be entrepreneurs, but maybe what we think about the future of business and how that might change? So that's Verne Harnish. So Verne, thanks so much for being here.
Patrick, glad to be here. Thank you, by the way, for getting some important content quickly out to the marketplace, because we all have to move quick. As we often say, your strategy is only as good as your next punch in the face. And I don't know about you, but we're being punched in the face every single day.
I think we've taken a few hard blows like never before. So it's interesting because so much planning, as you know, and as you've talked, so much planning and strategy goes into business, and you could spend a lot of budget and a lot of time getting ready for what was going to happen this fall. Then suddenly everything changes.
Yeah. So I really want to open it with two important ideas. I think first, and look, we're April 6th. If you're in the same business today that you were a month ago, you're on your way out of business. And which means, number two, there's never been a bigger opportunity to launch or relaunch. Everyone has told the stories of all the companies that have launched in a recession. And why is that? And we just held a summit and we hosted Margaret Heffernan. Margaret's got a new book out called Uncharted. Couldn't be a better title, How to See the Future. And she made two really critical points that I want to credit her for. First, the most important thing is you need to be ambitious. And so what you want to do is you want to look at and invest in and follow those entrepreneurs that right now are being ambitious and not backing away. And the reason you can be ambitious is crazily, you can get people on the telephone for 15 minutes that wouldn't have given you 15 seconds the last dozen years because we've all just been running crazy pedal to the metal. And so what does it mean? Like the Gulf War made CNN. CNN was a struggling network that Ted had launched until the Gulf War. COVID's doing the same for dozens of industries. So for instance, 3D printing. We've had 3D printing around with this big promise for the last 40 years. Overnight, it has taken off. Brad Feld, who's a big investor in that particular space, is seeing it because we need to get products out in minutes, not months. And I really think one of the key trends that's going to come out of this is localization again. We don't want to be caught with a global supply chain again, where we're up against not being able to get what it is that we need, whether it's mask gowns or whatever the case is, quickly. I think we've obviously seen that this is the watershed moment for distance learning. All of our children are having to learn from home as well as we're having to do this. And so what you want to be looking for, and we've made a list, we data scraped the media of about 125, what we think are the short-term and long-term hot opportunities that are coming out of this. And so that's what you want to really be looking at.
Really interesting. And one of the things that you said that I think is going to matter to a lot of people, we have, based on this, staggering unemployment that happened at a pace that's unprecedented, and people starting to wonder, is there opportunity in this for me? Because you just talked about being entrepreneurial and starting a business. So if there are people who maybe they were in good jobs and they kind of maybe got even comfortably numb there, suddenly they find themselves dislocated. Should they be thinking about opportunity right now and maybe going into their own business in the midst of this?
Yeah, they should. And first of all, let me provide some perspective. The economy, global economy was 34 trillion at the start of this century. It was 88 trillion last year. All the projections I'm seeing from Goldman Sachs and McKinsey and everyone is that we could expect here in 2020 for the global economy to shrink anywhere between, I'm seeing numbers of 12% to 25%, kind of 25% on the high end, 12% on the low end. If you look at that, that would just put the economy back to being twice what it was in the year 2000 at something around 70 trillion. So look, if you can't find $1 million or $1 billion out of that, again, it's your fault. It's our fault. And so this is a time not to rest, but to realize that this is when I want to launch the idea that I think plays into where the puck is going. Let's skate to where the puck's going, as has always been the favorite analogy. And either launch or relaunch your company or yourself, given those trends.
Well, I'll tell you, I think, and this is one of the things that is thematic for this particular series that we're doing, is when we're looking at crisis investing and the opportunity. Obviously, none of this is about being opportunistic, like buying thousands of things of hand sanitizer and trying to sell them at 10x their normal price. It's about saying that by becoming resourceful and moving into action so that you're a part of the solution that gets things back on track as compared to being paralyzed is probably the right idea. I know you have a lot of very significant business clients who look to you, and I think you've already given some of the things that you're telling them for perspective. But what kind of other advice are you giving, or are there any things in your own business that you'd even share that you think people should hear?
Well, first I want to underpin something very important that you said. Coming out of the last Great Recession, 92% of all the job growth came from the mid-market companies, not from small business. They continue to churn and burn, hire as many as they let go. Big companies have continued to lay off, and you've seen massive layoffs, even more from those. And so we know that the first line responders for this economy are the growth-minded entrepreneurs. And you've got to start with, the constraints right between your ears. And you've got to first reposition this in your mind that this is a unbelievable opportunity. This is the time to be ambitious and for you to be able to immerse yourself in where do I think the puck is going, and then pivoting very quickly and doing a lot of what we call ugly starts. Start ugly and figure out how. So, we've been using an example of a company called Proof. Dave Rosenmosier had launched 2 previous companies, and he wanted to do it much quicker. So he launched his latest company, Proof, in 3 days using our tools. And one of the key tools that we can provide to you, that you can provide to the folks who watch this, is our tool called SWEAT. Not a SWOT analysis, strengths, weaknesses, opportunities, threats, because that's what you look at when things are basically normal. We are not in normal. We're in a new normal. So we created a tool called SWEAT, strengths, weaknesses, and trends. And look, if you want to build a new company or rebuild the company you've got, the key in construction is 2 components: a solid foundation. You want to put those pillars down to bedrock, and you want to make sure you get the roof on as quick as possible. And that's what our form does. So what are the 2 pillars? It is facing the brutal facts about what are your capabilities, what are you really, really good at, and what do you suck at? And then getting up on the roof and looking above the forest and the trees to say, all right, and then what are the trends? So I'll give you an example of a short-term pivot. So one of our clients, and a good friend of mine, Rick Skidmore, owns a company called Timberlane. Timberlane manufactures wooden shutters. Now, by the way, not just any wooden shutters. They did the wooden shutters on the White House. They did the wooden shutters on the haunted house for Disney. Any property is designated historical. They are the only ones approved to be able to go up and put the historical-like shutters on. So it's a super high-end, beautifully run company by Rick, up in Montgomeryville, Pennsylvania, just kind of south of New York City, north of Philadelphia. He is facing, a week ago, having to furlough his 60 employees. But what are his capabilities? His ability to make really handcrafted things fast. And what was needed? Well, he's near New York City, so through his contacts, he got a hold of the hospitals, got a hold of the government agencies there, and long story short, overnight, he was able to pivot. His traditional business had dropped 75% overnight. He pulled back almost all of his media messaging. And if you go to Timberlane, you'll see that at the very top, they have pivoted to 2 particular medical needs. One are these masks that they've got to wear. And number 2, these intubation cases that doctors are using in order to deal with patients. And in 1 week, Patrick, he has pivoted now. It was originally 50% of his workforce, now 100% of his workforce. And over the weekend, this past weekend, he hired an additional 100 employees. And they already have an order for 5 million with a pre-order of 20 million units. And they project this week their revenue will have popped to $50,000 a day. And so Rick, in 7 days, pivoted his company from what it was traditionally doing to what is hot right now. Now, he doesn't know how it's going to flow out over the next 6 weeks or 6 months. But again, because our strategy is only as good as our next encounter with the enemy, he is doing it on a day-by-day basis. And so that's the kind of short-term pivot the guys are making quickly.
very, how can I put it, very reassuring story that people can do this type of thing, and that businesses can do this. And that's extremely fast. I mean, wow. I mean, that, making completely different things than what you used to, but I guess somehow they had the infrastructure to adapt pretty quickly. Which leads to, I think, a question. And it's something that you started to talk about earlier, but maybe you can give some more foresight here in your, as you see it. Industries now, let's say that we're getting to the other side of this, and we're getting back to whatever the new normal is. And I'd love to hear any thoughts you have on the new normal. But what industries do you think are going to be changed, that some are going away, some are going to be picked up? You talk about 3D printing and some other things. What else do you see?
All you have to do is immerse yourself in the media to see what is hot and what is not. I think, for instance, it's going to be tough to get big gatherings together quickly. But I know what launched again in 2 weeks, they had the idea. They launched last week, and it's called like Live Music Masters. And it was 5 musicians who got together and said, all right, let's start offering music lessons online. And they've already put in placeholders for yoga and all kinds of things, really bringing a kind of a professional community together. In the first week, they went from 0 to booking 500 music lessons online. By the way, these music lessons are being given by band members of pretty well-known bands. Now they're getting ready to see if they can pivot to some band members of really well-known bands. And they've gone from 500 music lessons in 1 week. They'll probably do 1,000 this week. They have hit the hockey stick projection already. As again, a good example of somebody who saw the trends. They're starving artists. They're not going to be doing their live events. And how can they build quickly the platform that's going to allow students to get their music lessons through some pretty well-known musicians?
Yeah, I know my kids are home now, and they're continuing school, but they're doing it at home. And it's my daughter was already homeschooled, but my 15-year-old was a sophomore. He was homeschooled for a while, decided to go back to school. And next thing you know, he's kind of actually doing much better at the online distance learning with his normal high school than when he was showing up there every day. And he's kind of liking this. It's for some reason for this kid, it's working out better, which is informing us about how we need to continue with him, if things go back to normal or when things go back to normal. So I know hotels, your event, live event canceled. We had several live events, things that we were going to be doing that canceled. But we're starting to find these other ways to commune people. I'm a member of masterminds like a Genius Network. And, next thing you know, we're having virtual masterminds as compared to the live ones. And I'll tell you, not getting on a plane, not checking into a hotel, not renting a car, I'm kind of liking this. But at this flip side, it's what's going to happen to the airlines, the hotels, and the cars. And other people say they like it too. So this really gets kind of interesting, and how it might all shake out. Your energy burn seems really optimistic, or energized, maybe is a better way to say it, that you're kind of energized into this. Have you seen anything like this before, or is this a different animal?
No, I saw this personally in 9/11. So the minute those planes crashed into the towers, we had our very first summit ever planned to be 8 weeks later. And remember, people are not logical, they're psychological. And those are the brutal facts that everybody needs to face right now, that there's no logic behind this. I don't think there's logic behind the data that's being shared around this whole COVID thing, but it doesn't matter. We know that people are psychological. And so even though it was probably the safest place to be from a terrorist was on an airplane, a week after 9/11, nobody wanted to fly for months. And so an event that we were hoping to have 400 at, we only had 100. And so it was that quick that we had lost back then $1 million overnight. We were growing rapidly, and that kind of cash flow really killed us. Now, what I learned out of it, and I hope people who survive out of this or rebuild out of it, I swore that I would have a year's worth of operating expense in the bank. And something that we've been talking to a lot of our clients about, and I got a really nice letter from one of our clients, Bill Kreider, who does the chickens for Costco. And he said, hey, I'm really super glad that you had pushed us that discipline to have that kind of stewardship of our cash, which, by the way, right now his banks are super appreciative of. And so I saw this more in 9/11 because it happened overnight and things were shut down overnight and people quit moving overnight. Now, we weren't sequestered, quarantined for a month or 2 months. So that part of this thing's unprecedented. But you know what? We've always come back. And again, it's in times like this that Margaret shared in 2001, right when this happened, Method, the company that makes those really interesting bottles of hand soap and the like. That's when they launched. And they talked about the fact that the guy that designed those bottles, they wouldn't have got his time of day. But he's like, hey, I've got some spare time. They got one of the top designers to design their bottles. They could get Target on the phone because Target was looking for some interesting new things to put on the shelves to attract people to come back in to their stores. And so, boy, for an entrepreneur that's, as you said, someone's got to secure a job. If you've ever, and it's not secure right now, if there's ever a time that's like, all right, let's make the leap, this would be time to do it. Because again, here's the key. You can get people on the phone. I've talked to people for 15 minutes again that wouldn't have given me 15 seconds the last dozen years. And that's allowed us to do some very, very quick pivots for our own company as well. We're super optimistic.
Yeah. That's so
facing
great.
The fact that we're not going to get $1 of traditional revenue for the next 6 months. So we're replacing all of it.
And I think so. Two things that really resonate. Number one, you've really got my own mind spinning, saying, who should I be trying to reach out to that I otherwise probably wouldn't have under normal circumstances because their availability might not have been there.
Yeah.
But number two, you just said something very profound. I think for even solopreneurs or individuals or people who have operations with employees at some scale. And this is, I think, the mantra, or maybe the premise is maybe a better word. You're not going to get $1 of normal revenue for the next 6 months. You got to let that kind of just soak in for a second, right? It's got to sink into your psyche that, oh, wait a minute, I'm not thinking right if I'm trying to figure out how to continue to generate the same kind of revenue we used to. It's got to be a complete pivot.
Yeah, and so that's what we did. I knew nobody was going to pay $2,900 for one of our summits. So we said, can we do a $295? We did some very interesting pricing, and in 72 hours, we generate over 200 grand in revenue. We like to kid, hey, we had over a $10 million run rate last week. But we see that we have an opportunity moving forward. Now, I want to mention for those that are investing here in a crisis, what is probably the most important routine? There are two. And that is, number one, I want you to measure literally, not how many minutes, but how many hours are you on the phone, or more importantly, video, connecting with that list. So I want you to take a piece of paper out and I want you to make the list of all the folks that you've ever dreamed of. Now, you've got to have a good elevator pitch of what it is that you want to do. And we did last week. And then I want you to spend as much time as you can talking to people, not emailing, not texting. You need to massively up the talk time. And by the way, they need to talk. We know that's the most important thing for our brain to do, to calm down, to shut down the fear centers, and for you to ignite your prefrontal lobes. Now, I want to be very precise. I'm going to call it kind of the 1, 2, 3 plan. First, I hope everyone has one friend, mine's Steve Watkins, that you can talk to 3 or 4 or 5 times a day. You just need someone who knows you can laugh with, will tell you the truth, will push back, that you can just connect with at a very deep human level. And so I talk to Steve on the phone 2, 3, 4 times a day. Number 2, I hope you have 3 advisors, 2 or 3 key advisors. Steve Hall's one of those for me. Ron Lovett's one of those people, John Ratliff, that then you can bounce ideas off of very quickly. We pivoted no less than a dozen times in 24 hours around what was the product we ultimately brought to the market last Thursday. And you're not going to think your way out of this mess. There's no way to think your way out. You've got to talk your way out of this. which then leads to number 3. And here I want to go back to the late T. Boone Pickens, who passed away a few months ago at 92. Was it 92 or 94? I just went blank.
I know he was in his 90s. I don't know exactly.
Anyway, T. Boone, when he lost it all in that 2001 mess, he had been worth several hundred million, and he basically lost it all. I've seen 2 different numbers. He was down to his last 2.8 or 3.2 million, but he was essentially broke. He had lost 90% of his ranch, the whole bit. And so he's in his 70s, broke. And he dared to ask the question, all right, what haven't I learned yet that made me lose all of what I had? And I love the fact that he still had this new beginner's mentality in his 70s. And so he went out searching for the answer. By the way, I'll give the answer in a second, but he made a change to one daily routine. And over the next 72 months, he took that couple million he had left and parlayed it into 4 billion. Now, what was it that he learned? 2 things about the human brain. Look, this is your competitive weapon of the information age. First, the key capability is pattern recognition. And you need to see the patterns just quicker, moments before the market and the competition. Number 2, we know that, again, only when you talk does it really light up the prefrontal lobe. So you take those 2 ideas, and here's what he did. At 5:45 every morning, 2 analysts would come in and start scouring the internet and their own network for what's happened in the oil and gas industry in the last 24 hours. And by the way, even before today, things change in every industry every 24 hours. And if you don't know that, your head might as well be in the sand. Then at 6:15, he would phone them on his way to his workout facility and engage in a 15-minute deep conversation. What did you hear? What did you learn? Go find out more information. Because remember, the oldest profession in the world is intelligence. It's what wins wars and wins markets. And whoever has the intel always wins. And so that's what you're gathering is firsthand real data. So he has this 15-minute conversation with them. They've fed his mind with what they found out at that moment. Now he goes in to work out his body. And while his body's working, his brain is processing and looking for the patterns. And then coming out of that hour at 7:30 every morning, T. Boone and his senior team had breakfast every morning where they would then discuss, they would get talk time as a team around, all right, what is it that we've got to do today in the marketplace? Then at the end of the day, when the markets closed, 4:30 Texas time, he would then gather that team back in a room and they would debrief. All right, what worked and what didn't work? So it was every 12 hours. It was rapid iterations of learn. Because see, you're either winning or learning. No one's losing. You're either winning or learning. And what you've got to do is get up the learning curve just quicker than everybody else in this new normal. That was the routine. So what are we suggesting to our clients? Go from the single daily huddle to now do it twice a day. You want to be gathering firsthand intel and data directly from your key customers, your key suppliers, and we want you to get together with 3 or 4 other people in the same or like industry and brainstorm together how we might do the pivot. You can't think this through alone. And then up your talk time.
That was really, really useful. Thank you. Very valuable. And, it's funny because my partner, Jeff Hayes, and I, when we would talk, constantly we'd be saying, I don't know, I'm not advocating for this idea. I just have to think out loud. I have to talk, and then we'll decide if it's a good idea or not. And we got to a point now where we don't have to qualify it anymore. We just know that we just need to talk out loud to be able to get to our understanding or get to a destination in our thinking, as compared to sit in our own minds quietly and try to figure things out. So I love that story. It really sets a great example. And I think there's some actually really good process in there with the rhythms of what you talked about. Just one other thing you said that I've learned from you how important this is. And ever since meeting you, it's one of many things that stuck as saying, I'm not putting enough consciousness on this. And especially now, it's probably very important. And that's the thought of pricing. Really thinking about pricing, whereas we were kind of glib in how we were setting our prices. And I think now it really takes careful consideration. Can you talk about that for a moment?
Yeah, we actually utilized last week this good, better, best pricing that Harvard Business Review did an article on about a year and a half ago in order to really drive revenue. And we've been talking to some restaurants that are doing takeout. And I think they very smartly, there's a restaurant right across the street from us who said, all right, here's our price if you want to come by and get their spectacular chicken dinner. And we've taken that out several times, Deborah and I. But some restaurants are saying, if you've been furloughed or you've been laid off, here's the price. And let's give something lower. On the flip side, they said, we proposed, why don't we make our restaurant available for one family for like $1,000? So let's do the good, better, best pricing. And so we priced our event at $9.95, at $2.95, and then we called it a hardship price at $95. And it was crazy, the mix of those. Anyone could have got it for $95. But we had enough other little kind of goodies in there for $2.95 and $9.95 that we had a good mix across all three of those prices. And the difference was 10x from the least to the most for the same 120-minute event.
Wow. It's really kind of startling. But it's, how can I put it? A lot of times I felt like I was modeling just other people and looking at our competitors and so on in the marketplace and realizing, boy, we're not being creative at all when it comes to this. And there's additional considerations. And now with what's going on, we especially, I think, have to be really mindful of. I know for this series, we threw out the old rule book and came up with a whole new thing. So it's really, I think, important to give consideration here. So thank you for sharing that. So, Bert, at this point, is there anything I should have asked you that I didn't that you'd like to talk about?
No, Patrick, you always do such an unbelievable job in the interview and letting us kind of pontificate a little bit. I just hope there's a pony in there someplace, that there's a couple of ideas that folks are able to take advantage of. Look, it's right between the ears. And we've been, my partner and I, Deborah and I, have been sharing a lot that old story. Well, it could be good, or it could be bad. And in every situation, you just don't know till you take the next step. And here's probably the analogy that I'm leaving with folks. We've been climbing Everest for the last 12 years, and all of a sudden this massive storm has come in, and we can't even see in front of our face. And so all that's critical is that you decide in the next hour. I don't think you can, in many cases, look out any further than, all right, what's the most important thing I have to do in the next 60 minutes? And you either have to take a step up the mountain, or some of us might have to continue to take steps down the mountain, but you can't stay still. And you take the next step, and then you reevaluate. And that's why the fighter pilots that won big and survived, were those that follow the OODA loop. And we've got to do the same thing investing. Observe, then orient, then decide, act. And the quicker your OODA loop is, the more likely you both survive and thrive in this kind of crazy environment.
Brilliant way to conclude, Vern. Thank you so much. Again, you always provide so much value in such a short span of time. I guess that to me, that's really your brand. Massive impact and value in very short duration. So I can't tell you how much I appreciate you doing that here again for us. And I am excited to watch how your company continues to provide value in the world and pivots and does what it's doing. And I appreciate you having such a great impact on so many entrepreneurs around the world.
Good. Patrick, thank you for hosting me.
Greetings. Welcome to Crisis Investing 2020. Excited to have the conversation we're about to have with Greg Gunther. Everybody's got their own context or point of view here as to what's going on. We are in the heat of it, so we know that this whole situation is fluid. I mean, the markets are changing day by day. The advice we're getting is day by day. The news headlines are changing day by day. So we're here April 2nd right now, just to timestamp it so that you can understand the reference point for when we're having this conversation. So let me just start out by saying, Greg, thanks so much for taking some time and talking to us.
Yeah, thanks for speaking with me.
So can you maybe just start out, Greg, tell us about your background. Basically, how did you get to be doing what you're doing today?
I have been an investor and a trader for close to 15 years professionally now. I'm a chartered market technician. I deal mostly with shorter term stock trades. I'm a chart guy. So that's where I'll be coming from today when I speak about the markets, not necessarily from a larger macroeconomic perspective.
So is all this market volatility your friend?
Not necessarily. I mean, a lot of the very short-term traders, day traders tend to say that they like volatility, but this is an unprecedented market that we're in right now. I think for 99% of the people that are trying to trade it, they're having a difficult go at it. The old saying that the market hates uncertainty is certainly true, and that's where we are right now. Even bad data would be a good thing right now for the stock market because we don't know how long this situation is going to last. We don't know how long we're going to be indoors. We don't know how long the economy is going to be frozen like this. And all those unknowns are what the market is trying to tackle right now. And because we don't have any of these answers, any little bit of news either way is just sending stocks either way higher or way lower in a matter of minutes. So it is a very difficult trade environment.
You used the term unprecedented, which is a common term I'm hearing now, and you've been around long enough to see other things happen like 2008. How is this different?
This is different just because it's faster. The market had to almost immediately recalibrate to a new normal. If you look back at the financial crisis, you'll note that the stock market actually topped out toward the end of 2007, and we were already well into a bear market by the time we got the Bear Stearns bankruptcy. Lehman Brothers, all that stuff that sort of sent us waterfalling lower into that huge tailspin in late 2008. So if you were trading from a tactical position right then, you would have already been short or leaning short on the market. And then you watched that unfold over a period of months until we got the big whoosh lower in the fall. And then once again in early 2009 before we bottomed out. But this happened almost instantaneously. We went from what were essentially all-time highs and markets breaking out across the world to one of the biggest routs that I've ever witnessed.
Yeah, it was kind of startling how quickly things happened. And, I know nobody can predict exactly, what's going to happen or when it's going to happen. Do you have any sense, at least right now, do you think we're near a bottom or it could go a lot lower, or maybe there's a probability of it going lower? Do you have a sense about any of that or not really?
I think right now we need to adjust to a bear market mentality. I do not think that the bottom is necessarily in. I think we've seen a bottom, not the bottom. I think that what we've seen over the past couple of weeks has been what we call a relief rally. There are plenty of people looking to sell or get out of positions here and higher up. And I think we're going to have to shift to that sort of selling mentality going forward. Also, I think that when you see periods like this where we are first entering a bear market, you're going to see a lot of whipsaws in both directions. There's going to be a lot of people who have been, I don't want to say brainwashed, but they've gotten used to the idea that the markets will recover quickly. And they will be more than willing to hop on and try to ride kind of a V bottom back toward new highs. And I don't think we're going to see that this time. I think that there's going to be a lot of pain both ways when it comes to people entering new long positions and trying to ride a new march higher, and people entering short positions late and getting run over by big, huge rips to the upside as well. So this is the kind of market where if you're not careful, you can lose both ways.
You said a bear market mentality, and I think some of the things you said probably are part and parcel to that. But can you just describe what you mean by bear market mentality?
Well, I think it's the type of mentality where you have to go from assuming that you can buy dips, and instead you like they say, sell the rips. You can't assume anything. You can't assume that bad news is priced in. You can't assume that this is as low as the stock is going to go. That's what a lot of people tend to do. This can't possibly go any lower. Well, unfortunately, that's not the case. The stock can fall much farther than the bottom of your chart. There's always zero, even lower down, and especially when it comes to riskier assets as well. So, not necessarily the time to be thinking about getting things cheap. Unless you have a very, very long-term time horizon in mind.
Yeah, it's really interesting. And so your frame of reference, you're not really looking at company fundamentals or the fundamentals of the market before this whole collapse and so on. You're basically charting and looking at technical analysis. Is that correct?
That's correct.
And in doing so, you're basically trying to anticipate what kind of moves there would be based on how things are charting. So are you charting mostly indexes, individual stocks, or both?
Yes, both. And you said fundamentals. Well, I mean, if you're looking at fundamentals right now, I'm afraid that you're going to have a tough time, because I guarantee you that there's going to be a ton of earnings estimates getting restated, and everything's in flux. So, I mean, I don't really know how you're going to make some sort of fundamental argument when you have all these moving parts and all these unknowns looking forward. We don't know the full extent of the government response yet, and we don't know the companies that are going to get bailed out and to the extent they're going to get bailed out. So there's a lot of unknowns out there right now that are going to impact fundamentals 3, 6, 9 months down the road. So I think a lot of that analysis is on pause until we can get a clearer picture on where we're headed.
Yeah, actually, that's a really keen insight, I think, because some people, some of the mentality, which I don't think is right, is that, well, this was a strong company before, and once we get through this, it will be a strong company again. And so therefore, it's probably a good buy, or, it's a discounted price on a particular stock. I know, Warren Buffett just bought 1 million shares of Delta or whatever, because it's thinking, hey, once we recover, they're going to be back on track. There'll be a down quarter or two, and things should start to go back to normal. But the reality is, I don't know that there's ever, what was normal from the past, I don't think it'll ever be normal again. I think there's going to be a new normal. What do you think?
I think you're absolutely right. People would try to compare this event to the financial crisis, when I think a more apt comparison is to something like 9/11. This is more of an immediate shock where we're going to see a cultural and financial aftershock, and definitely a new normal that comes after it. Now, that's not to say that the fabric of our economy is going to necessarily be too much different, but I do think that if you're trying to bottom fish or look for a value in a great company now, I mean that's fine, as long as you know what your strategy is and your time frame. Warren Buffett can afford to lose 50% on an investment right now if he wants to dip his toe in the water and buy some airlines, whereas maybe the typical investor can't afford to do that at this moment. So if you're looking at a company where you say Amazon isn't going to go anywhere, they might emerge even stronger out of this if a lot of brick and mortar retail, aside from grocery and food, takes a big hit. You could go ahead and pick up shares, but I would think of it more as an incremental buy. Buy some now, and you have time. I don't think we're going to go back to new all-time highs anytime soon. You're going to have time to pick up shares at lower prices, at favorable prices right now. There's no need to chase anything. If you want to start building a position, think about dollar cost averaging, or buying little bits at a time, however you want to do it. But there is no rush to go out and say, this company is going to be great, I'll buy it right now, because it could be a couple of years before we really see things get moving again.
I think in part, the difference between a professional like yourself and an amateur, like me or other people who don't do this, as their profession, is that, the idea, like you're talking about, building a position, meaning you're not just saying, oh, I think some things are going to be cheap right now, let me go back and buy into the market. It's like, no, there's a lot more complexity to the way that you're going to approach this, and maybe more of a measured process as compared to do this or don't do that. Is that sort of accurate?
Yeah, I think so. And I also think it's important to really sit down and think of where your mindset is during a situation like this. We're all cooped up in our homes, and it's a crisis. And in a crisis, especially, doers, movers and shakers, you want to go out and you want to do something. You want to fix something. You want to make it right. You don't want to just sit on your hands. And that can be kind of a detrimental mindset in a market like this, when sometimes the best move is to sit on your hands and wait and see what's going to happen. There's no need to try to overcorrect. If you didn't panic early and you're still in the market on the way down, this is not the time to panic now. The time to panic was back in February. And if you weren't panicking then right now you need to reassess and figure out what you're going to do, and be sure to have a long-term mindset about it if you're not some sort of short-term trader. There's plenty of time to plan and figure things out, instead of saying, I need to fix this right now. I need to go all in on something, because that's the type of action that can really burn you and burn your accounts.
Yeah, and I think there's a lot of FOMO that's attached to this, which is what so much of the our audience was asking, looking for recommendations, or saying, wow, the market just tanked. They're seeing, whatever their IRAs or 401ks, lose a lot of value. Maybe they had money in a brokerage account also, that was invested, and they saw it all come down. And now, it's, they're getting mixed messages. Sit on it, hold. Of course, you're hearing and seeing the headlines from many people. Hey, during these types of collapses is when many, where a lot of wealth is built. People, in hindsight, everybody looks back and said, oh, wow, a lot of people really got hurt, in the financial crisis in 2008. But all these people made millions and millions of dollars because, they figured something out. So a lot of people are feeling, I think, a combination of shell-shocked, what just happened and how fast did that happen? They're startled. And then they're looking and saying, but now should I get liquid and stay on the sidelines? Might it go lower? Or wait a minute, no, a lot of people get rich during this period. How can I figure out how to be a crisis investor? Sort of the theme of this thing. How do you become a crisis investor? And you spoke to the psychology, which I think is really important. Maybe we could dig in a little further and say, this particular type of person or profile or psychology should maybe just sit on the sidelines, because we're still getting through a lot of ups and downs right now. And this type of a person might want to enter the fray because they have the right mindset and position as far as maybe their liquidity to do it. So can you maybe talk about that a little?
Well, sure. We talked about bear market mindset, and I think one of the key things you can do now, if you want to do a total audit of what you're holding right now, if you hold individual stocks, is go through what you own right now and say, would I buy these today if I had the opportunity to? Would I buy this position over again? And if the answer is no, then maybe you do want to trim some of those positions and rethink where you're headed in the market. Now, another thing you can do is also line up a list of stocks that you would like to buy that you think are going to do well long-term, regardless of everything that's happening right now. There's a lot of great trading opportunities right now involving like what I call like the stay-at-home stocks. Like we're talking about things like Slack Technologies, Zoom, even things like Peloton, which is like silly to think about, but the gyms are all closed and people are ordering exercise bikes. So fundamentally, some of these companies might not be great, particularly like Peloton, which is a brand new IPO. But they are hot trades right now because that's what everybody's sort of thinking about. That mindset is sort of shifting to what are the stocks that aren't going to take a huge hit now? Things like Netflix or Roku or something like that. People are watching a lot of TV at home. And that's great and all, but like those themes, they're going to get shaken out eventually because everybody's on the same page with those. So you have to be a very nimble trader, I think, if you want to trade them. But also, you have companies that are going to be doing great 6, 12, 24 months down the line that are going to survive this and come out of it. And those are the ones you really need to think about listing to get in on as investments. Now, also, if you're going to buy something new right now, you have to decide what your plan is before you get into it. That's one of the main things, because once you buy it, all that goes out the window. But you have to decide, am I buying this now for a longer term hold? I want to hold this 3-5 years until, this gets to mature into a real investment, or am I buying this as a kind of a crisis trade? And if so, I'm going to set my stop losses appropriately on this. So if I'm wrong, I'm going to get out of it, and it doesn't get tossed into like a buy and hold bucket and forget about it, because that's another way that you can really burn yourself in a crisis, where you buy something as a trade it doesn't work out for you right away. And so you're like, oh, I'll just put this in a longer term portfolio and forget about it. That's not the way to go about things. Make your plan ahead of time, decide if you have a trade or an investment, and then make your move.
On the stop loss side, when you are saying, okay, I'm going to place a bet here, but I want to mitigate my downside, is it normally like 10%? Where do you normally place stop losses when you do?
Well, I think it depends on your individual risk tolerance. If you are very risk averse right now, I would say, yeah, you should put like a 5-10% stop loss on something if you really want to try to bottom fish a trade and play it higher. And then once it's in the green, put a trailing stop on it so that you don't let a gain turn into a loss. That's a real morale killer. If you see a stock that's kind of like running out of momentum, running out of steam, and you've owned it for a couple days or a couple weeks, depending upon your time frame, take the gains and run with them in this market. Remember, bear market mentality. Anything on the long side, if you're trading, is really hit and run right now, because we can see those big whooshes lower in a relief rally like this, and we can get back into the chop, and then who knows, a 10% gain could turn into a 15% loss in a matter of hours.
Right. Yeah, that's kind of the crazy thing in this market is that you could be up, you could be down really quickly. I've been seeing it. Can you talk about how some of the trades or some of the things you're doing right now personally? Like, what are you like kind of swing trading? What are your time horizons? And how are you operating right now?
Well, yeah, normally in good times, you can get away with kind of position trading. If you're looking at short-term trades, your entry doesn't really have to be perfect if the market's sort of, melting up, because, if you just sort of sit on your hands and wait, you'll probably get back to break even and it'll get moving again. But right now I'm being very picky with what I'm trading on the long side. And I'm definitely compressing my time frames. That's another thing. You don't want to get stuck in a bad time frame due to all this chop, where you could be absolutely right about a stock that pops and then you get a little bit greedy and want to hold on to it a couple more days, and then you're right back to where you started again, like I said. And so I'm looking at instead of time frames of weeks, I'm looking at time frames of days, at this point, when it comes to more of the swing trading stuff. The position trade stuff, I feel like you're almost in no man's land right now. If you're thinking about holding something for a few weeks, I mean, who knows where we're going to be in a few weeks, or how individual trades or sectors are going to be reacting to the news. So I think if you're going to be buying something, you need to be thinking in terms of days or terms of months and years, and there's really no in between.
Yeah, we are truly just one headline away from a sudden jump up in the market or a sudden drop in the market. Anything that is going to move news, as far as if they extend the quarantine dates, that could be, that's going to move the market down. If suddenly we're getting through it faster than we anticipated, boom, it's going to probably pop up. So it's really, really strange to, while it's all happening, to just kind of like see this. So are you feeling personally, do you feel skittish, cautious? Are you feeling kind of excited to be in the fray right now? What's your own mentality?
I think anxiety, definitely. I mean, and that's fine. I think it's just the kind of the world we're in right now is it's very anxious out there right now, and you don't really know what's going on, and so you have to take that into account when you sit down and when you're going to trade, and when you want to be in the best possible mindset, to be trading. And I think one of the ways you can mitigate, a lot of those negative feelings is just by trading really small. It doesn't hurt to be in the market right now if you're a trader, but I would definitely be putting on positions a lot smaller than I normally would be, maybe buying like 50% of the shares that you normally would buy. That way you can ride out some of the chop or some of the bigger whipsaws without it necessarily affecting you too greatly, because if your position sizes are too big in this environment, it's very easy to get stopped out and then you miss out on a big move. So yeah, that's what I'm doing. I'm putting on smaller positions right now when it comes to trading. And I'm just sort of doing my best to ignore a lot of the news around me and just focus very, intently on price, and let that kind of dictate my decisions. Because as soon as you try to start like inventing whatever scenarios or possibilities come along, you're going to quickly outsmart yourself, or the news will. So yeah. That's I think the key to all this is that don't totally tune out from what's going on in the outside world, but as far as your decisions go, I wouldn't try to play too much chess against the news cycle right now.
Yeah, good advice. One question, if I could ask, is can you give us literally almost like a use case, a trade that you're either in right now, or one that you already did, saying, okay, it was this company, I put in, I bought a certain position, I put a trailing stop loss in or didn't, and got out in this many days, just so somebody can get a sense of how you as a pro, are operating right now.
Yeah, sure. Well, what I'm doing right now is I'm looking for, on the long side, I'm looking for stocks that can kind of buck whatever the daily trend is in the markets. And there are some stocks out there that have like a high short interest, meaning that a lot of people are betting against them, that have the potential to squeeze in this type of environment. I've been trading in and out of several positions, notably Zoom, Slack, and most recently Peloton, looking for little pops that I can sell into, and making very small options bets. The options market right now, the premiums are very high, but there is kind of some room to sort of play around in there with some more speculative plays. And so that's the kind of stuff I'm looking at. I'm definitely focusing on the hotter names, and then compressing my timeframes to a matter of days instead of a matter of weeks, to try to just squeeze a couple extra dollars out of the market right now.
And are you, when you're in your long positions, are you putting in trailing stop losses, on every trade that you're doing?
Absolutely. I always have a trailing stop when a trade goes green for me. I never let it go red. I'll get out of break even if I have to. That's just a great way to restore your sanity in this type of environment right here. You're going to get discouraged very quickly if you see a lot of your trades go green to red. So that's what I'm trying to avoid.
It's so interesting, because especially you do technical analysis, you're looking at charts, it's a very left-brained analytical approach towards things. But what keeps popping into the conversation is how things can go against you and how it can affect your psychology. So as robotic as it might seem, there's still a human being and emotions that are driving the system. So it's interesting that you constantly keep that in consideration for how you're going to trade.
Yeah, it doesn't hurt to trade scared, and I mean, it's a game of probabilities any way you look at it, whether you're looking at, fundamentals or the charts. Nothing's 100%. When you take it, you feel like something, you feel like you have risk reward on your side, and as long as you follow your guidelines when you go into it and when you get out of it, you should be fine. You can make a perfect trade and not make any money off of it as long as you're following the rules. And you can make a very bad trade and make a lot of money on it. But, if you get into the habit of doing that, then you're not going to win in the long term. So you always have to be doing, quote unquote, the right thing. And that's one of the toughest parts about trading, is not getting wrapped up into the emotions of big wins and, a bunch of losers in a row or something like that.
So I think you probably already sort of answered this, but kind of to summarize here, let's say that you've got somebody, they're 40 to 60 years of age, roughly, in that range. They were an executive or some kind of professional. They had a retirement and maybe brokerage account and a certain amount of money invested in the market. They just watched it go down, in the way that it did, almost shockingly. And now they're wondering, should I just get liquid and sit on the sidelines and wait? Should I go back and enter into the market? And I know we talked a little bit about this, but if I'm saying I'm feeling a little wounded right now, but I'm not completely compromised, in the sense of saying I could take a little bit more risk right now, even though it doesn't feel good. So do you think this person should go ahead back into the market and be, as you're saying, do it cautiously, maybe place smaller bets than you would have before, and start to play in this thing? Or do you think it's just, if you're not a complete pro at this, you should just avoid it until things settle into a little bit more of a normalcy that doesn't exist right now?
Well, I think when it comes to a long-term strategy, an investing strategy, you shouldn't be switching up your long-term investing strategy during a crisis. You should be doing it during, good times. So I would hold off on any reevaluation of any type of dollar cost averaging or longer term strategy. Let that stuff ride. I mean, that was your intention getting into it, and that should be what you continue doing. And if you are looking to put on, more short-term trades and stuff like that, I would say that your best bet, and you can do it, obviously. I mean, like, I don't think this is something that you should avoid, but as long as you are following someone who knows what they're doing, or you have some experience in the markets, I would say go for it, but just don't try to hit home runs. Concentrate on singles and doubles and limiting your strikeouts during a situation like this, and then trade's much smaller. And if you're not comfortable with trading at all, you can always just paper trade and follow along, and try to get a feel for it a little bit. But yeah, I mean, it's not rocket science. It's more like just figuring out what your strategy is ahead of time and sticking with it.
Yeah, I think that's a great advice. And you said something that I think is really important, that as far as your investment strategy, you shouldn't be changing that during a crisis. You change that during times of normalcy, when things are sort of stable. So if you want to get in and do short-term stuff right now, maybe you can consider that, but don't change your entire investment strategy while all this stuff is going on. I think that was really good advice. So I want to thank you so much for taking the time and sharing all this. For me, it was very enlightening. So any final words that you have before we tie up?
I think we're going to get through this. I certainly hope we will. I think things are going to be a little different for a while, but the markets are still here, and we haven't even closed for a single day, as much as we've had limit up and limit down scenarios. And hopefully we'll look back on this period, a year or two from now, and know that we did the right thing with our longer term investments, and we did the right thing with our trades, and we all came out okay in the end.
Well, I think that's a great summary and a great a positive vision for the future. And I obviously we're going to get through it with the choice we have. We will get through it, but how we get through it, and when we look back on it, how we're going to feel about how we behaved, I think is something that's going to be really important. So thanks, Greg, so much for taking the time to share this wisdom. It's been really enlightening.
My pleasure.
Okay, this concludes episode 7. Really great content there that certainly inspired me quite a bit and gave me a lot of good insight. We have coming up next episode 8, and let me tell you, it's a monster episode. Why? Because we have the one and only, the man himself, Dean Graziosi. And I was just watching Dean a few days ago on a webcast that he was doing, talking about the mindset that you need to have right now to navigate these waters. It was so inspiring, so uplifting. I am excited that we can bring him to you. And we also have some more insight on real estate and real estate investing and what type of things you could be thinking right now from Aaron Kennard. So listen to those interviews. Episode 8 is going to be coming up, and let me tell you, it's a monster episode. Looking forward to sharing it with you.
Out of the ashes of a shift like this, out of this transformation of our world and our country, what brings us out, our role models, our leaders, is innovation. But here's the question I want to ask each and every one of you right now. This might be the most important reason you're watching this, is who do you want to be at the end of this? Who do you want to be at the end of this? Because this too shall pass.
I just think it's so important for those people that have capital to invest, to double down right now, to smartly infuse capital. It's a fantastic time when there's a lot of capital needs, and you can do a ton of good by infusing capital into various businesses or real estate or what have you. You're helping everybody, and the economy is just us, it's just the people. And you can also make really solid returns in the process of doing that.